All right, so we'll do some work on weekly profile tracking, and this will be a little bit quieter than normal, but just breaking down what we need to have if we're tracking weekly profiles. And I'll take a couple of weeks, starting off with the 20th of September or the week of the 23rd, I guess. So what do we need for weekly profile tracking? We have to have Monday's range. We need the new week opening gap. And we need to have previous day ranges. So let's track that out. Yeah, this looks good. So we're gonna do open book testing or open book reading. So 15-minute time frame to mark out the previous week's close at 4:45 and then the opening time at 9:30. So using that info, we can see that we had a bullish profile. And a bullish profile just means that we are staying above the new week opening gap. And of the bullish profiles, we can have either liquidity sweep type profiles or internal range type profiles. So we know there's over 12 intro weekly profiles that we can use. And this one would be defined as a Monday low. So a Monday low would have a signature of using the Monday range, and on Wednesday we're looking for an internal range sweep, and then from Thursday through Friday, generally speaking, we'll either stay in a bit of a consolidation and we'll use internal range liquidity. So the signatures are, we will have something inside of Wednesday's price action. So let's see how pretty we can make this look. So inside of Wednesday's price action, we would look for a internal range sweep. And the internal range sweep will be some sort of internal liquidity to then target a standard deviation off of the Monday range. So in this case, we can see that we had an internal sell side sweep here. Internal sell side sweep pulls into the new week opening gap. And the news event on Wednesday that may have been relevant was a 10 a.m. new home sales. And then we're using Thursday to basically frame out the internal daily range that will basically contain price. So on Wednesday, we'll see our more relevant move. And then Thursday, we'll start to define the range that will hold price for the rest of the week. Now, if we had, generally speaking, some sort of price action that dips down below a previous day's higher low, then Thursday through Friday can actually continue. But if we see Thursday's range is going to contain price, then that's why we're going to stay bound unless we see some sort of return to a form of liquidity. So it's a generally bullish weekly profile, and then Thursday into Friday we'll either stay contained in that range or we'll see some utilization of it and breaking out. So key factors of this type of profile are that we are going to stay within the range high and range low created by Monday. So that's what makes it a Monday low, right? So we have price creating a low of the week. We can see our new week gap gets worked through Monday. We're staying at or above the 50% of Monday's range from high to low, midnight to midnight. And as price reaches outside, it comes back into it, reaches outside of Monday's range, comes back into it. And then on Wednesday, we're looking for some sort of internal liquidity sweep, which we get here. We're still bullish, even though price is coming back inside of Monday's range. And then this actually happened all in the overnight. So we ended the day at 4:45, right in between here. So overnight session really ran this high. So that's an easy frame for Thursday to use that new week gap, but understanding that the overall profile is still bullish, we would not expect price to go any further than Monday's midpoint. So Monday's high and the Monday midpoint would be relevant areas to watch for, because yeah, you're in a bullish profile. So weekly profiles that are bullish, even when they have bearish movement, that bearish movement is going to get capped by any one of these key areas, which would be the Monday range high, the midpoint, or the Monday range low. And that's what we see here. So key things about this profile: when we see up until Tuesday PM or Wednesday PM failing to make a sweep below a relevant level lower, so without any sort of sweep here, if this range is protected, then we're not expecting this to be a bullish, a bearish weekly profile. And what that means is for every news event that happens after, if we have bearish movement, we can expect it to stay contained above the midpoint or Monday's range low. So holding this trade, for example, to get to this liquidity is unlikely if you have a bullish profile, bullish weekly profile. So general framework of the week is bullish. So bearish runs are going to be still profitable, but limited or capped based on what is being framed by Monday's range high, the midpoint, and the low. And I always find it interesting. Price has already determined that this is going to be the midpoint even before the midnight time frame is done. So this candle comes at 10 o'clock, and already from this time to this time, the rest of the day stays at this midpoint. Once we get to midnight, even when we break out of that range, breakout traders would be thinking we're going to continue low. This spike down sweeps through Monday's mid, but stays within Monday's low. I always find it very unique and interesting that price has already dictated that this will be the midpoint. It knows it. So we hit that measurement on the wick, and nice touch right to the 50% level of this gap. So as we hit that, then we start to move higher, but knowing that this is, up until this point, we're not 100% sure, but when price rejected off of the Monday mid level, the Monday low is maintained, and price then comes above the range high. So we're going to look at some news events to see how price used those news events to start shifting higher or lower. But in this weekly profile, we're using Wednesday as the key determinant for when we will be able to utilize a bullish run. Unfortunately, in this scenario, the event or the run happens in the overnight. So we can use that information to our advantage as well when looking at weekly profiles. But it's very important to to keep your bearings as the week goes on, because even if you're capitalizing on some of these moves, just understanding that you're waiting for that Wednesday PM to really define or give you that bullish run. So in this bullish run, we're going to use a couple of things to look at Thursday. So we've got 8:30 GDP. Let's go down to the 15 minutes. So again, knowing that this is a bullish weekly profile, a lot of what we're doing is, even if we see a bearish opportunity, we're going to allow ourselves to wait until we get to that range high. Hey, what's going on, guys? So we go down to the 15-minute, and with all of that framing in mind, understanding that we're in a bullish profile, utilizing Wednesday as that key determinant time. Even if we see a bearish setup, which we're going to look at for 8:30, 9:20, 10 o'clock, and 11:15, we understand that that bearish movement is going to be capped or limited by that Monday range. So just went through the framing of Tuesday and Wednesday on a bullish weekly profile, and then now just going through some of the details of Thursday, where Thursday's bearish run can still give you a profitable move, but you have to keep your wits about you, understanding that you're in a bullish weekly profile. So 9:20 is Fed Chair Pow Pow. 8:30 GDP. Let's make these 20s. And 10 o'clock home sales. And 11:15 Yellen. And we'll use a 5-minute to keep track of everything as we look in on this Thursday. So what we're understanding here is we knew that Wednesday in the PM would give a bullish run because that's how this profile works. We're framing the price action from Monday through to Tuesday. We see the 50% of the wick was respected. We're staying above Monday's range, but we're waiting for an internal liquidity sweep on Wednesday to frame up the PM move. Now, really wanted to join on this move, but it didn't kick off until 6 p.m. So just looking in briefly here, we can already see that the shift is starting to form in the PM session. So we're at 1:30 on Wednesday. We're waiting for sell side liquidity to be swept. We're waiting for a bullish run, and this is a nice signature. You know, it's a 2-candle run where we're taking different points of buy side. So in this, we're not looking at a breakout, but it's really this order block that's going to be more pertinent because of the structure of the shift. And then that order block in itself leaves that relative equal highs, which then only get capitalized on later on once the session is over. So we consolidate and then we bounce up quickly here in the Asian session. So we can still use that though. So even if we're not trading in Asia, and I'll talk about this projection here in a quick second, but even if we're not trading in Asia, we can use that information to say, well, if I am going to go short, we'll use a few things. First off, new day opening gap of 6,445. So that's our new day opening gap low, and then 9:30 is our new day opening gap high. So within all of this range, we know that we want, if we were to start becoming bearish, we can use all of this range to help us. And we would just keep our wits about us because we are in a weekly bullish profile. So this Monday high is really, we're definitely trying to take all of our, a majority of our partials off here at the Monday range high. And if we are not, then we're certainly not expecting price to get to the Monday range low, or else that would be a completely different profile. So not being surprised as price rejects off of these levels and not holding for anything more. So this is not a retrace when price is rejecting off of that Monday range high, failing to go any lower than the new day opening gap. That's how you're going to use the weekly profile to your advantage. So it's not that you cannot do short opportunities, it's simply that you are keeping your wits about you that short opportunities are likely to start flipping at these certain levels. So real briefly, just on this play. So framing our setup, we're saying 8:30 GDP. We're looking for those highs to be run. We get the highs run, then we're waiting for Fed Chair Powell to speak and the 9:30 open. So regular trading hours will kick off at 9:30, and we'll use a 1-minute time frame to break down the rest of this day. So 9:20, we already see the market structure shift kicking in. We get the 9:30 open. So let's change gears on this. So after the 9:30 open, we're waiting to see how price will react. We know that we're looking at new home sales. So very easy read here. I like to integrate. I loved the introduction of the first presentation that ICT had. So understanding that we're trying to get down through this new day opening gap and allowing the news to play out. When first presentation happens here, we are expecting it to be bearish until Monday. Monday's range high, to be specific. So this gray line, this Monday range high level here. Where did it go? This Monday range high level here. Which I'll put. Oh, I didn't type it in. So we're allowing all the news events to kind of play out, set the narrative. We understand that we've got this large gap from electronic trading hours. We understand we're in a bullish weekly profile. So that means that if we're taking a short opportunity, we have expectations for it to get to the range high, unlikely to get through the mid, and very unlikely to get to the range low. So with that framing in mind, we can see how the day plays out. We get the GDP news sets the stage by sweeping the highs. Then we get Chair Powell speaking at 9:20 before the open. We get an aggressive run through. We have first presentation fair value gap. We're expecting price to go lower. So new home sales spikes above, comes back above this relative equal highs here, but then really just gives you everything that you need. So you can see your fair value gap here. You can see your inversion breakout. So high, low, and breakers are nice to read when the candlesticks are consistent, like or congruent, when they're all the same. So what I mean by that is you have this consecutive run up, all green candles, and then this absolute breakdown, all black candles. So you've got these highs, or whatever high you have here. The lowest down close candle is here. That's your sweep. You're looking, once you see this run, you look backwards, find where your shifts are, and that will tell you where your breaker is, which will be the body on this low. Put that out in time, and you can see it gets touched a few times. And so whatever you use, fair value gap, it doesn't matter, turtle soup. The point is with the weekly profile, even though you have a clear bearish setup, we're below the 9:30 open, all the news events or the news events of key relevance have swept liquidity, shifted market structure. First presentation also gives you this BPR run up on the news event as you're coming down. I love these little signatures where price uses an inefficiency after the news event, does the damage, candlestick close below, the next candle wicks into it. And then that sets the stage. So I took this on the first fair value gap, put in my stop above 9:30, which was a slow today. Where are these? Just about a 7.75 position, and then targeting Monday's high. And as this price action plays out, you're just keeping your wits about you, because as Yellen starts to speak, you're anticipating price to either make a run or start to shift. So as price sweeps here, shifts one more time, revisits inversion levels, you're just keeping your eye trained on this Monday range high. And so when price sweeps it, we are not surprised if we start to see inversion going back bullish. So what I mean by that is as price shifts here, A lot of my intention was to catch this breakout, but price just didn't come back to it. But it's good to keep that stuff in mind. So, I mean, we'll talk about that as we look into Friday, and then we'll just jump into the next weekly profile. So this is not going to be a low time frame study on entries, but we'll just stick this through till end of day Friday. So as we come out, let's go up to the 1 hour, recap this weekly profile, and then be done with this week. So the weekly profile, you have a couple must-haves, or 3 must-haves that you're always looking when you're tracking weekly profiles. You need Monday's range, high, mid, and low. You need the new week opening gap. Think of it as a bookmark. If price is staying above it, if price is staying below it, or if price is staying within it, it tells you the whole story about the weekly profile. And the last thing you want is to continuously use previous day ranges. So when price continues to get to midpoints but not lower, obviously that means we're taking mids and highs and we're not taking lows. So easy to understand that if you're not taking lows, you're not bearish. If you're continuing to take highs, you're bullish. So that's one way that you can also tell. So you can see Tuesday's range here from low to high. Price returns just about to the midpoint. It breaks the high, returns to the midpoint, and then pushes higher. We're not taking lows. That means we're not bearish. So when we get through to Thursday, we can see that we had that bearish setup. Understanding that we're in a bullish weekly profile means that we're not holding out on this short to go down into Hades. We are being mindful that the Monday range high, Monday mid, and the Monday low are likely areas that price would turn. So we would not be surprised if price starts to show reversals. Understanding that we got to work through this new day gap, and once we work through the gap, we can use that weekly high to then keep price contained within that bullish profile. So like I was saying earlier, when you have this type of profile where price is not giving you a Monday midpoint test, then you are fully anticipating that we'll stay within that Thursday range. And that's a key signature of this Monday low profile. When you get Wednesday only using Tuesday, then Thursday is going to basically contain the rest of the week. So the setup for Friday is going to be using all the information of a weekly profile. So your classic things like a TGIF level, which I'll mark out for the purpose of this weekly profile, but just understanding the main message on a bullish weekly profile is that your bearish setups are going to be capped. So they're going to be capped to Monday's range high, Monday's mid, and certainly if they break Monday's range low, that's a different profile. But you can already tell once you've gotten past Wednesday's midpoint, you have a lot more information to tell you what this weekly profile is. So we can see that Friday, even though there was a nice bearish setup off of a TGIF level, we got capped by Monday's range high, and it's not surprising because it's a bullish weekly profile. So here, TGIF setup using the high and low before 8:30 on Friday. We'll put our TGIF levels in white, and the news events today were 8:30 and 10 o'clock, and we'll just jump down to the 5-minute for 8:30 and 10 o'clock. It sometimes matters what the news event is, but honestly, most of them are pretty generic. It's just whether it's high impact or medium impact. So PCE at 8:30 and then revised UOM consumer sentiment. In this case, those are not really doesn't really matter. But what I wanted to showcase was simply to say we get that news event at 8:30. It runs into this wick. Then we get this run above the high or making it equal highs from Thursday. And as we're breaking down back through the TGIF level, just like all other algorithmic, it's not an array, but it's a relevant level. you can already see how price uses that TGIF level and basically flips it. So down on the 1 minute, this one was fairly easy. We will mark out our 930. So first presentation was here. And 930 is open somewhere around here. This. So news event number 1, we get that information. We're waiting for regular trading hours to start off anyway. Then we get 930, chop, 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 chop. First presentation, touch, touch, touch. We know we have a 10 o'clock news event, so we're waiting for that anyway. We break it, we use it on the other side, we sweep above, come back to TGIF, and then we start breaking down. So as price is struggling to make it to a high, and we would understand that it would struggle because we're staying within Thursday's high and low, we would wait to see how price uses the TGIF level, so that 20% retrace. We are in a bullish weekly profile, so any bearish setups, we would need to be mindful that they're going to be capped by the Monday range high. So as price works its way after the news event, we're not seeing continuation bullish, so we have to flip our expectation. And the first presentation, what I like about it is it acts as a bit of a line in the sand. I really like those things that are like bookmarks or anchors for a weekly profile, because they'll just help you to frame your setup. They don't necessarily have to be your entry. They can be, but they help you to frame your setup. So as you drop off of the TGIF level, you see a market structure shift lower. We're working that first presentation back, forth, back and forth, back and forth. We're using the AM session setup, so we know that we're getting into that 1050, 1110 type of window. And we see this structure right here. So 930's price finally gets broken again. We run down. We're looking at this price leg. This price leg has a fair value gap. That fair value gap is also nested in this structure. So this whole structure here, it is a breaker, but we are in a bearish environment. So swing low, sell side. And again, with those continuous candles, right? So all green, all black, sweeping sell side, all green, market structure shift, but we're in a bearish environment. We're below the TGIF level. We're working this first presentation. This candle is your breakout. And when that breaker fails on this down candle, then that breaker becomes an inversion. So what that means is, as this bullish breaker it looks really good, everything about it says, hey, that's fine, that would normally be a bullish breaker. We're failing to get back above the TGIF level. We're back below 930. We're working the first presentation. We shift that price action. We're using that inversion, that we're using that same breakout, but now as an inversion to continue bearish. And it is cool that the first presentation also gets respected again. So that's this first fair value up here. And then we're using the end of the AM session, so 11:45, to then kick off this bearish move. We get down to the previous day's mid, so that's that yellow line. We sweep it, we revisit it, and what we're aiming for is we're looking at that old level that failed to get filled on the flip from Yellen's speech, again around Monday's range high, and then of course the Monday range high itself. So once price gets back to that level, sweeps Monday's range high, we're not surprised to see some sort of bullish reaction, and then we filter for the rest of the day. So that's this weekly profile in a nutshell. There are some limitations with this, naturally. I say naturally. There are some limitations with this. It is a mid to back half of the week. You have way more relevance in your setups when you have more information about what the weekly profile is. For example, if you just wanted to be short because you saw price just ran up a lot, you have a lot more relevance as to where price could terminate because of the weekly profile. So if you wanted to be a seller just because price ran up a lot and you saw your setup, you can take your short, but with the weekly profile, you have the advantage of kind of expecting where price will kind of halt or be a good point to take the majority of your profit off. Even on Friday, you can see the same thing happens again on Monday. So that's one. And I guess for the sake of time, I'll just do two. Contract switch. Oh, that's cool. Okay. Did I set that up? Yeah, contract switch. All right, so let's do one more. Just pick some random week. Let's look for Monday. So same thing again. You need previous days ranges. You need, what was this? Is this a holiday or something? It's 20. Tuesday, Wednesday, Thursday, Friday. All right, so open book again. We'll go down to the 15-minute. I'll go in replay mode just to make this easy. And we'll take our new week opening gap. 4:45. And we're looking for Monday at 9:30. Tiny. And then we'll take Monday's range. And let's just talk about what we see here. Midnight to midnight. Monday range low. Monday range high. And let's pull up Forex Factor for August 19th. Good old Jackson Hole. Okay, so no news Monday, no news Tuesday. Everybody's waiting for unemployment claims flash, and then Friday we've got Fed Chair Powell in the morning. Jackson Hole day 2 is all day. Last news event is 12:30 on Friday. So we're looking at AM setups, 10 o'clock on Thursday and 12:30 p.m. on Friday. And Wednesday is at 2 p.m. FOMC. So that's going to definitely set a different stage. So Wednesday, 2 p.m. Thursday, 10 a.m. I'm just taking the last news event here just for the sake of speed. Home sales. We had 9:45 was flash and 8:30 was unemployment. All right, so and Friday's 12:30 was the last news event, but we have a 10 o'clock red. Fed chair and MC. get some more candles to close out Friday. All right, so on a 1 hour time frame, what we have is new week opening gap is below. Price creates Monday's range. We're seeing price stay above the new week opening gap. We're not seeing price take the Monday low. So this is in general a bullish weekly profile. So the tips of a bullish weekly profile are very simple, not taking Monday's low. If you're not taking Monday's low, generally speaking, you're not in a bearish weekly profile. If you're continuing to take highs and not taking lows, you're generally bullish. And Monday's range is a key determinant for a weekly profile. There's 12 weekly profiles, so I'm just trying to keep it simple for this kind of first review. So this is a bullish weekly profile, meaning anytime price gets back to the midpoint, even if it goes below, once it comes back above, you're looking to be bullish, and your targets are previous day's highs and lows. So let's dig into it. Again, in these type of profiles where Tuesday takes the high, comes back around the mid, Wednesday takes the high, you're using the Wednesday PM as a framing. You're looking for what liquidity is left over, understanding that you're going to stay bullish. So you're waiting for events to finish, and even if you're going to be bearish, you're using the Monday high, the Monday mid, but certainly you're not expecting it to get below the Monday low if you're in a bullish profile. And by Wednesday PM, you'll have a general idea of what type of profile you're in. So even when you have these bearish runs, those are very good setups, especially if you're around those key levels, but you're not anticipating price to go much lower than the Monday mid. And if price comes back above the Monday mid, you're not surprised if price resumes its bullish profile. So this is again a Monday low of the week profile, which means that in the middle of the week, we're looking for internal liquidity to get swept. So it doesn't happen on Wednesday, so we're not surprised that it happens on Thursday. So what I mean by that is we have some internal liquidity of the same day, but we're looking for liquidity within the whole week. So just like in our first example, we're looking for where there is liquidity. And then when that liquidity gets swept, we're not surprised if price resumes a bullish setup. So let's look at a few opportunities here. Obviously, the news events are telling us that FOMC is going to frame the week. So Wednesday at 2 p.m. So right here, we can see that we framed the week. We're already staying in a bullish profile. But it doesn't mean that there's no bearish setups. It just means that we are not surprised if we get to certain terminus levels and price flips. So here we set the stage for 2 p.m. You can see how price, if you didn't catch something off of Monday, again, the limitation with using a weekly profile like this is you're going to be a back half of the week trader, or at least it gives you a lot more confidence to be that. So 2 p.m. on Wednesday, so that's your PM session on Wednesday, which is going to help you determine what the weekly profile is. You have to forego 3 days of trading, or if you are trading, just be aware that you're not going to get big trending moves as yet. So once you see that price action is now confirmed for what the type of profile is when price closes above Monday's high on the Wednesday PM, as price gets into Thursday, let's take a look at what kind of setups we can have. So Monday's range, we have new week opening gap, we're way above it. Last thing we want to frame out is previous day's highs and lows. So here is Wednesday's previous day high and low. We have a news event. The last news event is at 10. So we're going into Thursday. So 8:30, 9:45, and 10. So let's go into Thursday. We'll jump down on a 5-minute chart. So we have anticipation that if we're sweeping previous day highs and returning into a range, that we will anticipate that we will use that range information. So previous day high and low setups they're basically that, right? You're just taking the previous day's high and low, and you're using that information to frame your trade, and you're working algorithmically around time. And news events are the events that will kind of help you to frame the time and which macro or which piece of information you want to use. So we know we've got our last news event at 10, so ideally we're trading 10:05, 10:10, 10:15, and on. You can already see the framing of this setup is here. Once price closes back below that previous day's range, after the news events are done, we're looking for a retracement up to the level of the previous day's high, and then we're targeting the previous day's low, understanding that if we get down to the Monday mid and we get a reversal, at some point we're not surprised if price resumes its bullish run. So it doesn't mean you can't get bearish setups, it just means that you're being realistic about when or how far price will go. So regular trading hours, we see the opening price here at 9:30. Go on to the 1 minute time frame, and I do not have 1 minute, sorry. I am gonna have to stick with 5. I'm sure I can get this in FX replay, but let's just use it here. So 9:30 open here. We have the run. We wait for the last news event to finish at 10. Price closes. Once you have a candle close below the previous day's high, you're setting your entry at the previous day's high, and then you're targeting the previous day's mid, Monday's high, the previous day's low, Monday's mid, etc., etc. Understanding you're in a bullish weekly profile, you're not going to be shocked if price doesn't go much lower than the Monday mid. So once you get that set up here or using the 5 minute time frame, you can have this fair value gap. Price wicks into it, we start to break below Monday's low. Now again, you have to be mindful of when the AM session is ending. So you see your 10:45 candle here. You have a candle close back below the range. So you're looking for a high as your stop. So this would be your stop level. Even though price gets very close to it, it doesn't get there, right? You stay above it. Then you get into that 11 o'clock hour. So like I was saying, 11:10, 11:15. You can see how price closes back below Monday's low, wicks it one more time. That's a really nice one. And then you're looking at your next high. If we're not breaking highs, then we're not bullish in this fractal. If we're breaking lows, then we are bearish. Price sweeps all the way down to the previous day low. Price hits that previous day low, stop shy of the Monday mid. Hopefully can keep your bearings here. So this is the previous day's low. This is the Monday mid. So Monday's midpoint is right there. We run back up one more time, feel one more inefficiency, slam all the way back down. You can see this order block turns into an inversion here on that wick. I'm sure that's also probably 50% of this SIBI. We sweep below Monday's mid. We get very close to the new week opening gap. No issues there. Then we close off that day as a bearish day. So it's our first down day in the week. So for each previous day, we're running higher, staying consolidated, but generally speaking, staying bullish through the middle of the week. FOMC sets the tone for the weekly profile. It's the first big news event. We see that we have a bullish weekly profile. On a bullish weekly profile, we can still have bearish moves, and so we're using the intraday price action. We see that smart money reversal. We capitalize on the bearish move, understanding or not being surprised that when price flips or reverses or changes its direction on a key level, like a Monday mid or a Monday high, we're not surprised. So the next event that comes up is we flip price here on the Monday mid. We start to run bullish. We do the same thing. Let me just pop up to 15-minute time frame. And we're going to set our range. Stay high and low. And just like before, if we have this run and we're watching to see are we going to stay within Thursday. So when price is in this Monday low, Thursday's range is an internal play unless price gets to the high or low. So it's very much expected that price is going to stay within Thursday's high and low when you have this type of profile. The only time that changes is specifically if it does something with the Thursday high or low. Otherwise, you are working internal range liquidity. That's a signature of a Monday low profile on Thursdays. So staying within that price action, we'll do the same thing here. Now let's get onto a 5-minute chart actually. So 5-minute chart, we know we got Fed chair and then FOMC. So FOMC kicks, Fed chair kicks off the day. Let's mark our 9:30. Wish I could get the 1-minute chart. I'm sure there'll be some cool stuff to see there. So we get that 9:30 price run. Fed chair opens up. We don't sweep the high, which means that generally speaking, we're staying bullish. We're waiting for bullish setups. We're waiting for news events to finish as well. So even though there's stuff going on here, we're waiting for news events to finish. We can see that as this price action closes, the structure is, I mean, it's very easy to see if you're looking at it the same way. Sell side sweep. And it's always nice when it's just continuous. It's the same looking candles, right? Same looking candles. So what that leaves you with is this breakout. And so the way breakers work is like you want to enter after there's been a shift in market structure. So once this shift happens, then you're looking for the breaker entry. I'm sure on a 1-minute chart there will be some more cool stuff to look at here, but the point is that if you're working algorithmically and you're seeing that you flipped the midpoint of Monday, so Monday's mid was swept, we did not break the new week opening gap, we did not break the Monday low, then even though there are bearish setups, the general tone for the week is going to be bullish. So waiting until the news events are done, seeing that price action structure shifting bullish, it would not be surprising to, or it would not be unexpected to be able to take a bullish array, which would in this case would be this breakout, take the break, and then you know that you're working internal range liquidity. So you're looking at these internal highs, internal highs, internal highs, whichever one you are able to get until the end of the session. So in this case, we only got to this internal high, which is fine. But that would be how you would work the Thursday range, understanding that in general, you are in a bullish weekly profile. You are not surprised by getting bullish setups after the news events have kind of done their damage. So 9:30 gives you a bit of framing as well, getting back above 9:30 here. And then you're using all of this as kind of like a step ladder. So any array on this side of the curve, if you want to look at it that way, is going to then act as an inversion. The other thing, just again from a higher time frame level, is you're looking at this Monday high, which you have to just keep plotting throughout the entire week. You can't ever take your eyes off of it. You can see how price consolidates around that level, and once it breaks out of that level, there's one more array here. So you've got both a breakout, you've got the order block, you've got the inversion fair value gap, and you've got the literal level of the Monday high. That gets retested one more time before taking the internal liquidity. Because we haven't taken any internal liquidity as yet, the price action fractal hasn't completed. So when price is consolidating here, there's no internal liquidity that it's taken. Now, of course, you could look at the inefficiency as internal liquidity, but the last leg of this sell side of a buy program is the high. And so that's why this is working as it's doing here, which is consolidating, leaving several bullish arrays here, market structure shift, leaving one more level of liquidity to hit internal because we're working Thursday's range high, Thursday's previous day range. So signatures about this one more time. We're setting out the intention of the week. The limitations of using this is that you're really working the back half of the week. You're waiting to see the framing of the week. There's normally like a significant news event that can kind of help you to frame the week. In this case, it was FOMC on Wednesday. Once that news event has passed, you're using that information. So at this point in time, the only information you know is that we're in a Monday low and we're taking highs. That's all we know right now. We're taking highs. So as Wednesday closes, what you have confirmed is that it's a Monday low. This is a Monday low profile. Wednesday high, Tuesday high, Wednesday high, and Thursday high are your reversal setups. But Wednesday closes in the PM, you can already see that we're not leaving relative equal highs. Excuse me. And so on Thursday, even if you were looking at this and saying, hey, this could be a Thursday high of the week profile, go ahead, get in on a bearish setup. There's no, I mean, if you see a setup, go ahead and go get in on a setup. But don't be surprised if price gets to the midpoint. Don't hold out for it to go to Hades. Don't look at this and say, well, I'm just going to hold regardless of any reversals or any price action to the bullish side. If price flips back above Monday's mid, then what you're seeing is not a retracement, but a resumption. It's resuming the weekly profile, which is overall bullish. So as price revisits that Monday midpoint, so looking at the far right side of the chart there, once it revisits Monday's mid, you are not surprised. Now, once you've got that determined, then you're saying, okay, I know I've got a Monday low. I'm going to work within Thursday's previous day high and low. That's my landscape for a TGIF. So let's actually mark out TGIF. So we understand the news events. I'm going to take those off. The point of them is just to, continue to stay time-based. So we have the high and low before 8:30. And those are our TGIF levels. So they become a draw, they become a rejection, they become a close, they become a flip. Like they're used, but you just have to keep your bearings. So as the news events finish and you see that, this rundown, here's another thing about if you're assuming that it's a bullish weekly profile and you had this bearish run, like look on a 5-minute chart, and you're seeing this bearish run, you're saying to yourself, man, this has got to be a bearish day. Well, pause. Where is Monday's mid? Where is Monday's low? If I'm not below those two levels, I am not in a overall bearish week. So even though I'm sweeping and working and sweeping those TGIF levels and I'm staying bearish, I'm not closing off of these highs, and I'm crashing down through 9:30, there's a news event coming up. Wait for the news event to pass. See what they do. They take internal liquidity. They don't close below Monday's mid. They're a far away away. Prices are far away from Monday's low. So when I see a bullish setup, I can have confidence to take it because I am not in an overall bearish week. All my news events are done. I have not taken any sort of significant low. My previous day's range for Thursday is there. So once I work that bullish level, I can use that TGIF as a target, and understanding the nature of Friday working within Thursday's range, I'm taking profit at internal liquidity. I'm not trying to hold for it to fly to the heavens. I'm being very realistic. And then keeping in mind that once we break above Monday's high, revisiting that high is not a concern. We're way above Monday's mid. We are not even anywhere close to Monday's low. So retracements to continue going bullish are not unexpected. All right, so I'm going to leave it there. I will put this one up on the channel, and yeah, we'll do it again.